There's a guy at work, 53 years old, solid career, smart with money, the kind of person who reads the fine print, compares prices, never carries credit card debt. He's got a folder on his computer with every insurance policy he owns: life insurance, home insurance, car insurance, a critical illness policy he bought in 2003 because his advisors said it was the responsible thing to do. He feels covered. He feels like someone who did the right things. And he has absolutely no coverage for the risk that is most likely to destroy everything he spent 30 years building. That's not bad luck. That's not ignorance. That's the insurance trap. And Gen X walked into it with their eyes open, their paperwork filed, and their premiums paid on time every single month. Like, subscribe, and let's start. Number 1. The life insurance that's protecting people who don't need protecting. Picture this. It's 2001. You're 32 years old, 2 kids under 7, a mortgage that feels enormous. Your partner works but earns less than you. An advisor sits across the table and explains that if something happens to you, your family needs to be protected. You sign a life insurance policy for $750,000. That was the right decision. That was genuinely smart financial planning for that moment in your life. But here's what nobody came back to tell you. It's now 2024. Those kids are 30 and 28. They have their own incomes, their own apartments, their own lives. The mortgage is paid off. Your partner has been building their own pension for 20 years. Nobody depends on your income the way they did in 2001. The risk that justified the policy no longer exists, and yet the premium leaves the account every month like clockwork. The average Gen X person in this situation pays approximately $175 per month for coverage that was designed for a family structure that no longer applies. That's $2,100 per year. Over 15 years of unnecessary payments, that's $31,500 gone. If that same $175 per month had been redirected into a diversified investment portfolio at a 7% annual return, it would have grown to approximately $55,000 from one policy review, from one honest question that nobody asked. Psychologists call this the status quo bias, the tendency to leave things as they are because changing them requires effort and feels like disruption. It's the same reason people stay in bad jobs and keep subscriptions they don't use. In insurance, status quo bias has a very specific price tag, and for Gen X, that price tag is $55,000. Number 2. The disability risk nobody talked about at the kitchen table. Here's something your parents never discussed. Not at dinner, not at any point in your entire upbringing. Not the advisor who sold you the life insurance, not the HR person who walked you through your employee benefits package.
Nobody sat you down and explained this. 1 in 4 workers will experience a disability serious enough to interrupt their income before they reach retirement age. Not a terminal diagnosis, not something dramatic, a serious injury, a chronic illness, a condition that makes working impossible or significantly limited for months or years at a time. The average disability claim runs approximately 2.5 years. Think about that for a moment. For a Gen X person earning $70,000 per year, 2.5 years of disability means $175,000 in lost income. Before medical costs, before the mortgage that doesn't pause, before the household that keeps running regardless of whether the income does. $175,000. Not from a market crash, not from a bad investment, from a medical event that hits 1 in every 4 people. And when you asked most Gen X people about their disability coverage, they say the same thing. I think my employer covers it. Maybe. But employer disability coverage typically replaces around 60% of income, often for a limited period, with definitions of disability that are narrower than most people assume. The gap between what the policy actually pays and what the household actually needs is significant. Gen X insures their car for every possible scenario. They leave their income, their single largest financial asset, 40% exposed. That's not careful. That's the trap. Number 3. The $180,000 nobody planned for. Here's the number that changes the conversation. Approximately 70% of people over the age of 65 will need some form of long-term care during their lifetime. This isn't a nursing home statistic. It includes home care assistance, help with daily activities, supported living. The majority of people who reach retirement age will need some level of ongoing care, 70%.
Your Gen X neighbor who runs marathons. Your colleague who hasn't been sick in a decade. Your friend who eats clean and goes to the gym 3 times a week. Statistically, most of them will need long-term care. Here's what that care costs in most developed countries. Home care support at 4 hours per day, approximately $3,500 to $5,000 per month. Assisted living, $4,000 to $6,000 per month. Full residential care, $7,000 to $10,000 per month. Average duration of care needed, approximately 3 years. At $5,000 per month for 3 years, $180,000. Coming directly out of the retirement fund that was supposed to last 20 years. Now here's the part that should make Gen X genuinely angry. Long-term care insurance purchased at age 55 costs approximately $200 per month for meaningful coverage. That same Gen X person is paying $175 per month for a life insurance policy protecting 2 independent adults in their late 20s who need absolutely nothing from that policy.
The monthly difference, $25. The financial exposure difference, $180,000. For the cost of 2 takeaway coffees per week, Gen X could shift their protection from a risk that no longer exists to the risk most likely to arrive. It's not arrogance that stops them. It's not laziness. It's that nobody ever reframed the conversation. Number 4, the health coverage that covers less than you think. Gen X believes they have health insurance. They do. But here's the thing about health insurance that the policy documents don't make obvious. What you have and what you actually need are rarely the same thing. Most health plans come with an annual out-of-pocket maximum, the most you'll pay in a single year before full coverage kicks in. In most developed countries, that number sits between $7,000 and $9,000 per person. In a bad year, a diagnosis, a surgery, a treatment course, that's $8,000 gone before the insurance does the job it was bought to do. And that's just the beginning.
Dental care, almost never covered adequately. Comprehensive dental work costs $1,500 to $3,000 per year for someone with real dental needs. Vision, rarely covered beyond a basic annual check. Glasses, contacts, corrective procedures, out of pocket. Mental health. Coverage exists, but limitations are real. Many plans cap the annual number of sessions far below what ongoing treatment requires. Here's the honest version of what Gen X health coverage actually looks like. It covers the catastrophic. It partially covers the serious. And it leaves the chronic, the ongoing, accumulating, expensive reality of aging largely in the hands of the person paying the premium. Gen X pays the premium and feels protected. What they've actually purchased is a partial shield with significant gaps. In a genuinely difficult health year, which statistically becomes more likely after 55, the uncovered portion can easily reach $12,000 to $15,000. And every single time, the person who's been paying faithfully for decades is genuinely surprised when the bill arrives. Number 5. The full picture. What $1,000 a month actually buys. Let's look at the complete insurance situation for a typical Gen X household. Monthly insurance spending. Life insurance, $175, protecting grown, independent adults. Home insurance, $150, reasonable, probably appropriate. Car insurance, $150, reasonable, probably appropriate. Health insurance premium, $400, covers less than assumed. Critical illness or supplementary policies, $75, overlapping with other coverage. Disability, technically included in employer package, rarely reviewed, probably inadequate. Total, approximately $950 to $1,100 per month, nearly $13,000 per year. Paid consistently, filed neatly, reviewed never. And inside that $13,000, the life insurance is protecting a scenario from 2001 that no longer exists. The health coverage has an $8,000 annual gap that doesn't appear anywhere in the marketing materials. The disability coverage is probably protecting 60% of an income that needs 100% protection. Long-term care, the coverage with a 70% probability of being needed, is absent entirely. Gen X is spending $13,000 per year to feel protected. And feeling protected and being protected are two entirely different things. Researchers call this insurance illusion, the psychological comfort of holding a policy, regardless of whether that policy actually addresses the real risk. The folder exists, the premiums are paid, the brain registers safety. The actual exposure remains. The insurance audit. Here's what matters this week. Open every insurance policy currently being paid for, every single one. Read the actual coverage, not the summary. Ask 3 questions for each. What specific risk does this policy cover, and is that risk still a real threat to my current life? If this risk actually happened today, would this policy prevent financial damage or just reduce it slightly? What risk am I currently not covered for that could cause serious, lasting financial damage? The pattern that emerges will almost certainly be the same one that appears across Gen X households everywhere. Overcovered, where the original risk has faded. Undercovered, where the actual risk now lives. The folder feels like protection. For most Gen X people, it's a meticulously maintained illusion, built at 35, never updated at 55, and quietly inadequate for the financial threats that are actually coming. The premiums leave every month. The gaps stay exactly where they are. Review the coverage. Match it to the actual life being lived right now, not the one from 20 years ago. Because paying for protection that doesn't protect you isn't responsibility. It's just an expensive habit that nobody questioned. I'll see you in the next video.